What's going on, guys, and welcome back to my YouTube channel. My name's Antonio, and in today's video I'm going to be breaking down the rising wedge pattern and how I use it within my trading. If you're not already subscribed to the channel, make sure you hit that subscribe button so you don't miss any more content. For those of you wondering what services I provide, we actually have an automated trading service where we will do all the trading for you. There's no cost. All we ask for is 30% of the profits. So if you're someone who wants to make another passive income or don't have enough time to trade, then this service is definitely for you. So just drop me a message on Instagram. But for now, let's jump straight into the video. Right, guys, so the rising wedge. So a brief overview of what we're going to be discussing in this lesson. So an introduction, characteristics of the rising wedge pattern, how to trade the rising wedge, advantages and disadvantages of trading the rising wedge pattern, and then also some live chart examples. The rising wedge pattern is a commonly observed technical chart pattern in the Forex market. It is created as a result of the price action moving in an upward direction with a gradual decrease in the range between the highs and the lows of the price. The formation of the pattern is identified by the wedge-like shape that is tilted to the upside. This particular pattern serves as a crucial sign for traders to potentially anticipate the end of a bullish trend and the onset of a bearish trend. This is what the rising wedge looks like in just like a visual format. So characteristics of the rising wedge pattern. So trend direction. Pattern is most commonly observed during an uptrend, indicating that the bullish trend may be nearing its conclusion. The pattern reflects a weakening in the momentum of the upward price movement and a potential reversal in trend direction. The shape of the rising wedge pattern is a wedge that is tilted to the upside. The upper boundary is formed by a line that connects the highs of the price movement, while the lower boundary is formed by a line that connects the lows of the price movement. Volume. As the pattern takes shape, traders may also observe a decrease in trading volume. This is a result of traders losing interest in buying the asset as they recognize the weakening momentum of the bullish trend. So, how to trade the rising wedge pattern? 1. Identify the pattern. The first step is to identify the formation of a rising wedge pattern on the Forex chart. This involves looking for a pattern that has a distinct wedge-like shape that is tilted to the upside. Traders should also note the presence of the two sloping trend lines that create the boundaries of the pattern. 2. Wait for confirmation. Once the pattern has been identified, traders should wait for confirmation that the pattern is valid. This confirmation is generally indicated by a break below the lower trend line, which signals the end of the bullish trend and the beginning of the bearish trend. The confirmation provides traders with a better sense of direction for the market. 3. Sell. Once the pattern has been confirmed, traders will sell the asset. The manner in which traders initiate a sell is contingent upon the particular trading scenario at hand. Each trade possesses its unique attributes, and it's advisable for traders to adopt a responsive rather than a preemptive approach in their trading. Advantages and disadvantages of trading the rising wedge pattern. Advantages. High probability. The rising wedge pattern has a high probability of success. Clear entry and exit points. The pattern provides a clear area for targets and stop loss placement. And risk management. The pattern provides a favorable risk to reward ratio. Disadvantages. False signals. Like any other chart pattern, the rising wedge pattern can give false signals. It is essential to wait for confirmation before making a trade. This confirmation provides traders with a more reliable indication that the trend is likely to reverse. We're now going to look at a live chart example of how I would trade the rising wedge pattern. Right, guys, so this is going to be a live chart example of the rising wedge, how I would identify it, and then also how I would actually trade using the rising wedge pattern. So the first things first, obviously we're going to be looking at the trend. We're going to be looking at where price is heading, and we can clearly see that price is moving to the upside, right? We can clearly see that's happening. And the first thing we're going to do is we're going to connect the low points within the market, which is across here. And then what we're going to do after this is we're going to connect the high points, which are above here. So that's what we're going to do right now. That's the first thing you need to do, because then you can kind of get an idea as to what pattern is forming. So we'll connect the low points, which is there, and then we will connect the high points, which is there. And now we've got this on, we can clearly see that price is forming a rising wedge pattern. And what is a rising wedge pattern? Well, it just tells us as traders that the bullish momentum is slowing down. Okay, we can see here how it's a lot more broad, it's wider here. And then as we're approaching the top up here, it's getting more and more narrow, and price is basically just squeezing in between this wedge pattern. And this is giving us kind of early signs that price is going to reverse, and selling momentum and a bearish market is imminent essentially. Now, just to give you an idea of what's actually happening as we're kind of moving to the upside, we can see how price is basically just pulling back and using previous resistance as a support. Okay, so we're breaking through, we're forming nice impulsive moves, and then we're pulling back, we're retesting it as support, and then we're moving to the upside again, and then once again we're just pulling back to previous resistance and using it as support. But now, as you can see, we haven't actually done so. So we've actually formed a double top within the market in this specific scenario. So price has formed a nice double top within the market. Price has failed to create a new higher high. So that's just another confluence to add in. So this is a rising wedge, but we also have a double top within the market. Let's just delete all this now. And then essentially we're going to play out. So this has happened now. We're forming higher highs we're not forming higher highs anymore. We formed a double top now. And one thing we're going to look at is actually the length of the impulses. So if I just measure out the first impulse from this low to this high, we can see that it's around 46. If I then measure the next impulsive move, which is from here to here, we can see that this is 32. So we can already see that the impulsive moves are getting smaller and smaller. And then we look at the final one from this low here to this high, we can see that this is 23. So every single time buyers are stepping into the market, the volume is decreasing. The amount of buyers who are entering this market is decreasing. So this is just essentially what a rising wedge is. So a lot of you will draw rising wedges onto your charts, but you need to know what is actually happening. And what's happening is what I just explained, where buying momentum is just slowing down. That's all that is happening. It's just the momentum from buyers are slowing down. And what's that telling us? It's telling us that a reversal could happen soon. So I'm going to play price out and just see what happens. So as you can see, we break to the upside. Okay. Let's just play this out a little bit more. So we break to the downside. Sorry, we've broken through the low points. This is our most kind of recent low where we retested this uptrend line. What I'm going to do here is I'm going to draw an area. Okay, this is our most recent support, and this is how I trade the rising wedge pattern. What I will be doing is I'll be basically allowing price to impulse, and like how we had it over here, like how we were impulsing to the upside and retesting previous resistance as support, we're now doing the opposite. We're waiting for the impulse to the downside, and then we're waiting for the retracement back to retest previous support as resistance. So it's just the opposite now. Previously it was resistance turned support, now it's support turned resistance. And notice how this is impulsive and this is corrective. Well, now that's flipped as well, because this is impulsive and we're correcting to the upside. But the question is, and the question I get a lot is, where are you waiting for price to pull back to? So there's a couple things we can do here. So the first one being this area of previous support to be used as resistance. So this is a nice spot, but we want to just add another confluence to make sure that this is the right space, that we are entering price at the right place essentially. And how do we do that? Well, we use our Fibonacci retracement tool. So notice how, yes, this is a video about Fibonacci retracement, but we're adding many more confluences, and you have to do this within your trading. You can't just use one thing. You can't just have a rising wedge and then sell. You need to have more confluences. In this state, we have a double top, we have the impulse, we have a change in market state where we're now impulsing to the downside and correcting to the upside, rather than impulsing to the upside and correcting to the downside. We're adding loads and loads of confluences, and the final confluence we're going to add is the Fibonacci retracement. Okay, so we've dragged it from swing high to swing low, and we can see that the 61.8% lines up perfectly with this area that we had lined up. Okay, so this does make for a nice area within the market to be entering our sell positions. So let's say we're going to enter a sell position here. Where are we going to put our stop losses now? There's no real logical area to put our stop loss above, so we're going to use the 78.6. When I say logical, I mean there's no real resistance level. You could obviously put it all the way above these highs, but for me, that's just too much of a big stop loss. I would just put it above the 78.6. And then where would we be targeting? Well, I always use the start of the rising wedge, okay? So the start of the rising wedge, which was down here, that is where I will be looking to target, okay? So let's play price out and see what happens. We had a nice kind of retail trap here as well. So what happened here, which was very, very interesting, is there would be a lot of people entering this market way too early. So if I draw your attention to this part of the market here, those 3 candles, okay? We had, a bullish candle followed by a smaller bearish candle, followed by a large bearish candle. You got to ask yourself, how many of you would have entered that trade? How many of you would have entered that trade like this and then put your stop loss just above the high and then targeting potentially the same position? This is why so many of you are losing when you're entering your trades, is because you're either getting in too early or you're being victim of a retail trap. And then what you'll do is, this is what most of the time will happen to you guys as well, is you would then get stopped out. You would then leave the market, you would get annoyed, you would walk away, you would close the laptop, close everything, you would walk away. And then you'd come back to the screen and notice that price has moved in your desired direction and you've completely missed the move, okay? So what you need to be doing is, even if you are entering the market too early, just wait again. Maybe you can enter a secondary position. Maybe it's okay to be wrong. I'm not saying you have to avoid losses, but sometimes, just be a little bit reasonable. And as you can see here was a nice stop out, huge candle to the upside, touching the 61.8 and the area of interest that we had, and then we move to the downside. So a good lesson to take away from this is, don't be victim of retail traps, or if you are, be aware of it and then re-enter the market again, because you can afford to take a small loss. You get back in, and as you can see, this is like a nice 1 to 5 move. So you've made back all the losses plus more. So it's okay to be wrong a couple times before you're right. That's absolutely fine. In this example, as you can see, price did go a lot further to the downside. I'll just put that in there. As you can see, we did move a lot lower, but again, we just want to be very, very conservative with our targets. We don't want to be targeting too much. It's a very, very calculated place to have your take profit. So I'm not going to look at this now and think that I need to be extending my take profit even more going forward. You have to be disciplined, because sometimes it won't reach your take profit, sometimes it will exceed it, but you just have to kind of find a plan and stick with it. And my plan when trading the rising wedge is to trade to where the rising wedge started from, which is down here. So I have the same process every single time, regardless of the outcome. From experience and from back testing, this is the best way to do things in my opinion. But yeah, notice how we had a nice correction here, retail trap, entry into the market, brilliant entry, and then price moved essentially straight towards our take profit. So yeah, that is a brilliant example of the rising wedge on gold on the 1 hour time frame. This was back in 2020 on the 16th of September. So a very, very good example of how to use it. And yeah, guys, that's about it. So we'll go straight into the outro now. I hope that was helpful. Thanks for watching this video, guys. If you enjoyed it, make sure to leave a like and a comment. Let me know your thoughts in the comment section below. And if you're not already subscribed, make sure you hit the subscribe button so you don't miss any more content. And remember, if you want to join our automated trading, where we will do all the trading for you, then just drop me a message on Instagram and I'll get back to you as soon as I can. Take care, have a great rest of your week, and I'll see you in the next video.